walking you through making the financial adjustment. And we have a few really special guests with us today, Mike from Comerica and Marci as well. And then we have Karen on here from Grow, who will speak a little bit more about the Grow funding opportunities. As we are going, this will be recorded, and I will be sending out a link after the session, as well as PDF file of the slides as we're going. So without further ado, let's get started.
All right. Thanks, Rosie. And I want to welcome everybody to Grow's and Comerica Bank's Comerica Business Sense Bootcamp today. Today, the subject is going to be navigating small business financing. And so this is the final of the three-part presentations Grow and Comerica Bank has been doing over the last 2 months. So again, I want to thank everybody for being here, and please ask lots of questions because that's what makes this all fun. So Rosie, if you want to do the next slide there?
Sure.
Thank you. And I just want everybody to know that this PowerPoint presentation will be available to you at the end. So if you have an interest, please make sure Rosie has your email address so she can get this out to you. So we're starting out with business financing. What are the key considerations for small business financing? Where can you find funding? Of course, every small business owner can fund their small business all by themselves with their own money. The next thing is, I always tell folks, you need to earn the right to borrow. It's not no one wants to borrow you the fund, but you need to earn the right, meaning your business has to be cash flow positive to be able to be out there in front of somebody to ask them to borrow funding to have your business grow. Again, show profitability. I can't remember how many times I've talked to small business owners and asked them to make sure that they record all their sales. It's very easy sometimes when you're in a cash business not to report that cash sale. But please do that, because if you show a zero profitability, your lenders, when they look at that information through your profit and loss statements and your balance sheets, and they look at that information, they're making determinations to lend on that information. So if you show profitability, you can show that you can repay the funds that you're going to borrow. Understand and keep working capital available. As you can see, during a pandemic, those businesses that had systematically saved, worked up, and built up their working capital are more able to survive downturns in the economy than those who've not done any planning. Be lean on fixed assets. Everybody's always looking to grow their business, and they're always looking to buy that next fixed asset. Sometimes you need to grow without buying that fixed asset and then figuring out how to get that. And then match your sources of funding to the things you're going to buy. Next slide, please. So startup financing for a lot of folks, where do you find that? Again, your personal cash equity into your business, using your own personal credit, using your own credit cards is not the thing that I would recommend because you're going to have very high interest rates, but that might be something you need to do finally to get started. You might want to ask family. Now, if you're going to ask family, I'm going to tell you to make sure you keep it on a very formal setup. Don't put your personal relationships with family at jeopardy. You write out documents that explain and spell out what you're going to do, what they're going to do, and how to do it. So you're going to, I suggest a legal person to be involved at that point when you start getting family involved, so everybody has the right mindset and what they can expect. Of course, you can look at some of your own assets. One of them is a home equity loan, which you can tap to provide capital into your business. So we're going to go on to the next slide, and I'm going to turn it over to Marci.
Yeah, so I think we have to back up a slide, Rosie. We actually should be on the prior slide. There we go. Thank you. So my name is Marci Chapin. I actually work for Comerica and have worked in the various business lending functions for many years here at Comerica. And so what Mike has actually just been talking about is when you start up your business, starting out, gathering working capital and gathering equity through the various sources he mentioned. And so in addition to that, once you have that equity piece in your business, there are various types of business loans that you can look at accessing once you have a bit of a history in place for the company. And I'm going to just talk about two types just so that you understand the different types of business loans that banks provide. And the first is a business line of credit. And that is for day-to-day working capital needs of the business. And when we talk about working capital, everybody says, well, what is it? It's kind of a fancy phrase, but it really just simply means the cash that you have available in the business to pay bills, to make payroll, to buy inventory, and to purchase fixed assets as needed, and to develop new products. And a line of credit helps you to manage the fluctuations of all of those items as you collect money from your customers and basically match up the timing between when you receive your cash in from sales versus when you have to pay your bills. And so a line of credit is set up and it is revolving. So it goes up and down as you need access to cash and can be paid down when you're at a time where you have extra cash available in the business. Many times people say, now, why would I be looking at this? Is it a sign of a problem if I need a line of credit? And the reality is a line of credit is used many, many times when a business is growing. Because if you sell on credit terms, so if you aren't paid for your products for 30 to 60 days, during that time period, you have to cover all of the items I was just mentioning. And so the more business you're doing, sometimes the more working capital that you need. And so a line of credit can be used for that real positive reason of continuing to help finance the growth of a business. When you're looking at a line of credit, it's typically a loan that is set up with collateral, and collateral in a business is usually, for a line of credit, is usually the assets of the business, which is primarily accounts receivable and inventory. If you come in and you set up a line of credit for your business, you should also expect, especially in the early days of owning a business, that you would also personally guarantee or personally back your line of credit. A line of credit can be is typically put together on a variable rate, and those products typically carry an interest rate based off of prime rate, which today is 3.25%. However, you usually pay a spread over that. So most business lines of credit might run prime +2 to prime +3%, so 5 to 6% in today's world. All right, next slide. So the second type of business loan that's very typical for a small business to access is a term loan. And a term loan is something where, if you think of it, it's very similar to an auto loan or a residential mortgage loan you might be familiar with on the personal side. A term loan is for a specific use or purchase of a specific asset. So you may be looking to purchase equipment for your business, or a delivery truck or a vehicle, or you may be to the point where you're actually purchasing a building. In that case, that's where you would be looking at a term loan. And when you look at that, a term loan, if you're financing equipment, is typically amortized over 3 to 7 years. And if you're looking at real estate, you're usually looking at a much longer amortization, somewhere between 15 and 20 years. On a term loan, you do not have a balloon. That's usually fully amortizing over that time period. But on real estate business loans, you typically have a balloon period that we look at about the 5-year mark. So if you are looking to purchase equipment or a building, you should be planning on a down payment. And generally speaking, for both of those types of assets, you want to be looking at having 20 to 25% down on your purchase. And so Mike talked a little bit about staying lean on fixed assets. It's a good idea to keep your term debt at a very affordable level. And of course, requiring a down payment actually causes you to have to accumulate funds to make those purchases, and allows you to have additional equity in your business. And so those two loan types are the types that we use most often, line of credit and a term loan. So Rosie, if you want to go on to the next page. So if you are to the point where your business has been established for some time and you want to consider, you say, hey, I have a need for working capital line, or I have a need for buying a piece of equipment. What do I have to do to get ready to go to the bank and apply for a loan? What we have here are various things for you to consider. First of all, having a business plan. And if you've been in business already, sometimes just simply a forecast for the next year is a very good thing to have available. You need to know what you can afford, and that is really determined by looking at your profit and loss statements and looking and saying, how much excess cash flow do I have available? Because this is the area that the bank is going to look at when you are determining if they can afford the principal payments on the loan. And so most people don't really think about the fact that principal repayment is not part of their profit and loss statement. So you have to be able to look at the profit numbers and say, do I have enough excess money here to repay this loan? And that's part of studying your financial statements, which we have in number 3. It's always good to know what your credit scores are. We talked about that actually in our very first seminar, but knowing your credit scores and knowing that they're at a level that the bank is going to consider is important. And being aware that collateral is going to be requested is also important. The down payment is the equity contribution that we mentioned. And then lastly, you do want to look at reviewing your options. And you certainly can take a look at looking at alternatives at various banks. There could be various structures and rates available. So it's always good to shop around a little bit. Next slide. I'm not going to actually go through all of these again. I did mention, these are the areas that you're going to need to cover in order to qualify for a loan. Good credit, equity, and repayment ability. If you do hear the term, or if someone asks you what is the loan to value ratio, I just want to mention that because that is something that comes up fairly frequently when you're applying for a loan. And that is very simply the amount of the loan to the total value of the asset that you are looking at purchasing. It's primarily discussed with real estate. So if someone says, hey, we will do up to an 80% loan to value, that means you need to have 20% down and 80% of the total asset purchase can be financed through the loan. Next slide. If you are putting together a loan package, make sure that along with the forecast or business plan I mentioned earlier, you typically include at least 2 years of business financial statements. And that can be a business tax return, or it can be an internally prepared financial statement. But more typically, banks are looking at using your actual tax return income. So it may be the tax return for the business, or it may be the information that's available on the Schedule C for a sole proprietor in your personal tax return. Because you will be asked to support your business loan personally, it's typical to include a personal financial statement. And that is a statement that many times it's part of a business loan application. It's included in the actual application, but it's an area where you're going to list your personal assets and any personal liabilities that you have. And then in the last section, if you haven't already provided it, personal and business tax returns. So that would be the common information that will be requested if you apply for a bank loan. And with that, I think Mike will be looking to talk a little bit more, and then Karen will add on some information from Grow.
Thanks, Marci. And so if you can go to the next slide there for looking for a loan. So everybody that we're talking to today, of course, when you start looking for that loan, you want to do some research on who you want to bank with and who you want to procure your loan from, because there's many different institutions you can get a loan from. You can get them from banks, regional lending organizations, maybe the organization that you're buying a piece of equipment has in-house lending for the equipment. Say you're buying a GE production facility and they have GE financing. You could look at that. And then, of course, based on where you're at for growing your business or starting out, there's organizations like Grow that help small businesses that are not quite ready for that banking relationship grow into a banking relationship. So that's where we're going to have Karen step in and talk about Grow and what they have available for small business owners in the Kent, in Ottawa, and Muskegon areas. So I'm going to turn it over to Karen.
Great. Thank you, both Marci and Mike. Rosie, probably switch to the next slide. Grow, for those of you that may not know, is a small nonprofit. We're a 501c3, and we're considered an alternative lender. We are a CDFI, which is a community development finance institution. So we are a lender first, and we provide lots of great technical assistance, training. We have volunteer coaches and mentors that will work with you. As Mike mentioned, sometimes as you start your business, or it's just early in the process of getting that business to a growth point or having a credit history, Grow and other alternative lenders will step in and just work with you to get you to the point of having a loan that you pay down maybe for the next 1 to 2 to 5 years, and then being able to then go back to your bank and keep that relationship for your deposits and everything else that they provide. But our bankers tend to be one of our biggest referral sources, because they would love to do all of these loans, but they just aren't in a position always, because it might be too early, it might be too small. There's a lot of reasons. And so what we try to do with our microloans are to assess what your needs are and not overburden you, but look at the real needs and try to help you supplement what you might even get from a bank or from a family member, and then step in and do a loan. As you see on the screen, if it's just a quick, small loan to get a new computer, a new piece of equipment, we will fund all working capital opportunities. We do not do real estate at this point, but you might just need that sewing machine or something to get you going. That would be a rapid loan. It is a higher percentage rate, but the benefit of a Grow loan is that we can work with you to try and get you that funding. It is amortized fully, so it's stretched out over up to 5 years, but we can make that smaller. And at the end of the day, if in a year or two you're going great guns and your business is thriving, you can pay us down with no prepayment penalty. You can also then go to your bank and say, I'd like to do that line of credit or that term loan and pay off Grow. So you have a lot of flexibility with Grow. Currently, we can go up to $50,000. So those other two categories are a little high for us right now, just based on the funding that we have. And we get most of our funding from the SBA. We get a lot of generous corporate funders such as Comerica and other folks that help us re-lend funds out into the community. And we also have here in Muskegon the Community Foundation that is helping us get recovery loans out into the community. Currently, as COVID hit, our entire team, we have a team of 8 people, got on the phone and called all of our clients, borrowers, anyone that we could reach to just see how they were doing. We immediately went into the mode of getting money into the hands of our borrowers with $10,000, up to $10,000 working capital loans to keep the lights on, pay that rent, keep your people paid if you still had them there. We then went out to the community, and we cover 9 counties across West Michigan to find out what other businesses, specifically in Muskegon and Kent County, because that's our core. How are you doing? How can we help you? How can we step in and provide some breathing room for you because you're not currently getting a lot of income or you're at 25% capacity? And so those loan programs, that was the COVID in the heat of the moment program that we were in. And then we transitioned to the Restart Kent County and the recovery loans here in Muskegon to allow businesses to reopen, to truly recover from what just happened. And those are ongoing for as long as the money lasts. And we have online applications on our website, which is growbusiness.org. And we literally are just trying to get small doses of funds in the hands of people, again, to keep those lights on, pay the rent. Even if it's past, you're past due 2 or 3 months, we can help you with that and then give you the ability to buy some time to move forward and actually get those revenues coming in again. The SBA has generously, on all of our loans, offered to pay the first 6 months of those loan payments for all of our borrowers. So again, your payment isn't due till the 7th month. By then, you might be back where you need to be. The banks, the relationship, we always encourage you to talk with whoever you have your accounts with, who you have that relationship with. When they're ready, you guys can determine when you pivot to get some bank financing. And they may just walk right alongside of you with, through this process while you have the grow loan. And then when you're ready, you can pivot to the bank funding. So that was a lot of information to cover. And I don't know, Rosie, if there's a second slide there or not, if we included another one. So as I mentioned, this is the Kent County specific loan, and we have a flyer, and all of this information is on our website. We have remaining and some generous donations, again, that we've received from Comerica recently that will allow us to continue that lending process up to $10,000 at a time. You may just need $3,000 to pay a landlord or to get some of your people back on board. And so there's a lot of flexibility there. The next slide just touches on their very similar programs is the Muskegon County Recovery Loan Program. And here in Muskegon, the Community Foundation for Muskegon County and some of their generous donors are providing a lot of that funding here. And the only timeline we're under is that the SBA has said we will pay those first 6 months if the loan closes before September 25th. So we are under a little bit of a pinch there, but the loans will still be available after that. And we're here to assist, direct traffic, get you to those resources as a nonprofit. We are entrenched in the ecosystem of both Kent County and Muskegon County and across the state to make sure you're talking to the people and resources that you need to get your business up and running, to continue the growth and just, again, recover from what just has happened. So I don't know if for any of the three that have spoken already, if anyone has questions, but I know we'll have time for that. I think I've covered Grow. And is it Marci then or Mike?
No, it'll be Mike.
Okay.
So do I go with key points to remember, please, Rosie? There you go. Thank you. So everybody, just kind of a summation of everything we've talked about for over the last 3 events, financing is getting the money you need to start, operate, and grow your business. You need to create a budget for yourself at the beginning of the process. And remember that a budget is not static. It needs to be flexible. So as your business changes and it changes around you, you make those changes within your budget to keep up to date with that. In a lot of my careers, before I was with the bank, it was always about keeping track of your sales and beating your sales from the previous day. It was a thought process in all the Fortune 500 companies I worked with. And still today, I look at that as one of those points that I try to bring across is keep those records, be diligent about that, but also make sure that you're keeping those things that make you successful and focus. Make sure you have sound bookkeeping, keep up to date. I can tell you I do volunteer income tax for small business owners. And when they come in to do taxes, if they come in with a box, I send them away. So you don't want to be that small business owner that is not focused in having all that information readily at hand, because you'll need that to make good, sound decisions. Software, will be very helpful when you do all that, because you can scan stuff in. It will automatically transfer it to Excel spreadsheets depending upon your programs. I don't have one that I recommend. I always tell folks to do a little bit of research or have a referral from somebody who might know somebody who does really good bookkeeping for small business owners. Make sure you understand the three important statements that you need to have always: your balance sheet, your cash flow statement, and your profit and loss. Those are the three things that will help keep you focused on the end game for yourself and for your business. Always remember to separate your personal and business records and funds. It's very frustrating for yourself and the CPA or the bookkeeper that you're going to work with and the tax person when all those are intermingled and you have to take additional time to separate it out. Because it's important that you keep those business records separate for tax purposes. And all that affects your ability to get a loan, your credit score, of course, your equity contribution to your business. Everybody's going to look, if you're getting into small business, they're going to want to know what you have in the game, what have you committed. Because when we loan money on the financial side, we're looking at that ability to repay based on a loan to value ratio of your business. So if you want to go to the next one, 14 there, Rosie. Thank you. So I kind of put over, in conclusion here, why it's important, some of the common concepts we've talked about in the last three meetings we've had. We went over credit, financing, why you grow your business and how to finance your growth. We talked about working capital, fixed cash assets, how they're important to you to make you successful. And so what we did today is a little different, is we brought Marci and Karen to you, and we're kind of opening up the floor for the next 15 minutes for everybody who's here. They can ask specific questions. They can ask questions to lenders here to give you an ability to give yourself some ideas of questions that you might have, but you don't know how to ask them. Here's a safe place to go ahead and ask those questions. We ask those questions. So if you want to go to the next one for Marci and Karen's, bio here, this gives you an idea of what they do and how long they've done it and how successful they are at it. And so, Rosie, if you want to open up, or if anybody's sending a question and want to ask Karen or Marci, I'd really appreciate that.
Absolutely. So as Mike said, anyone with a question, feel free to either put it into our chat box, or at this time, I think it'd be all right if you unmute yourself and just the floor is yours. So please use it. We have one question, and it's, are we looking for just finance questions or tax-related questions as well?
It would be finance questions because we didn't bring a tax expert to a meeting. And so I would not want to provide information on taxes that would lead you astray.
I'll go ahead and ask, is it important? I have a business checking and a business savings set up. Is there a reason why I should open a separate business credit card along with that to establish credit?
I'll answer that, Mike, if you want. I mean, I think that if you are able to go in and apply and get a business credit card, it does help to establish some business credit. But it also is just a really, it's probably the earliest way to get that working capital that I spoke about. It can be used for purchases. Sometimes you will find that it's got, 0% for 12 months. There's many times I'll tell people if they're looking for just a fairly small dollar amount to actually use a business credit card for that because of some of the promotional rates and options that are available with a business credit card. I will tell you it's normal on a business credit card that they're going to go off of your personal credit. And so when you're applying for that business credit card, just be aware that that's primarily what they're going to be pulling, especially for the smaller credit cards, meaning say 25,000 and under. It will be primarily based off your personal credit.
Okay. Would you recommend getting a credit card then instead of just using cash to buy things?
I would, because I think if you, one of the biggest things that I think is important is keeping as much cash available as you can in the business. Just like for what Karen mentioned as we came into this COVID situation, nobody knew this was going to happen. And, I think cash is really king, and to the extent that you can keep a good excess cash position in your business checking and your business savings, using the credit card helps you to do that, even if it's just managing that 30-day float and putting purchases on that credit card and paying them off. It does help to supplement your cash position in your business. So I'm not saying necessarily to start running, large credit card balances. I'm simply just saying to use it sparingly and creatively to help to keep a good cushion of cash in your business.
Okay, thank you.
Thank you for the question.
I would agree with that. We have a lot of clients that potentially could just fund it themselves and use their own cash, which is great. And if you aren't able to do other things, I think that's a good way to start, but it doesn't help you build that business credit history that the banks are looking for and that you need to kind of start doing to leverage your business for and getting ready to be bankable. So as long as you're managing control, as Marci talked about, that you're using it wisely, using it for cash flow, paying it down regularly and leveraging your own assets, then I think it's a good tool. Like anything, it can get dangerous when you feel like you have all that free access to capital if you don't have the resources to pay it down. But I think it can be a nice first step. And Grow, again, is kind of there for that similar reason, is to do a smaller loan to get you going and get that credit history, paying things off and getting that regular reporting going on so that when the banks review for funding, they will start to see that you have regular revenues, you're paying your bills on time, and it's very similar to your credit score, but on the business side. So,
okay, the last aspect of that, do utilities count with that as well?
I'm sorry, could you say that again?
Sure. I was just saying the last part of that question is, would utility bills count in establishing that business credit as well?
Paying utility bills would establish credit.
Okay. like at the building I'm using for my business.
Correct.
I have not seen it go that far to pull, to ask for utility bills as establishment of credit. For business financing, I know that sometimes they do that on the personal side when you're looking at like a mortgage and you got to find a way to, show some of the bills that you've paid if you don't have a lot of credit. But I have not seen that on a business credit score.
Thank you.
We had another question come into our chat box, and it says, do you have to stay under a certain percentage with how often you're using the business credit card?
That's a great question. And I would say there is not a percentage that you have to stay under. It's more about controlling how you're using your business credit card to fund your operations, meaning you don't want to, again, say you have a $10,000 credit limit on that business credit card. You don't want to have it be at the $10,000 limit continuously. You want to work at paying it down to a zero balance at some point in time, so you can show that you're managing your cash flow and your business credit that you're using in the correct way. If you just use it and then it just stays at 10,000, all of a sudden, when you go to institutions, they're going to ask you, why are you treating your business credit card like a term loan and just making a minimum payment, which will, it's not good for your business because you're losing, cash is an opportunity to reinvest in your business when you're paying a higher interest rate.
The other thing is whenever you're looking at having an outstanding balance, if it's on a business credit card, you always want to look at that business credit card and say, what asset do I have because of the balance on that card? I mean, if you can't answer that question, then you want to be a little bit concerned. But if you can say, look, I have this business credit card because I purchased this computer equipment that I'm going to pay off over 3 years, or I used it to buy inventory to get myself through the Christmas season. And when the Christmas sales are done, I'm paying off the credit card. So you always want to look at, when you're looking at any loan, making sure you're matching up the financing to the asset that it helped to acquire. Because if you can't do that, that many times will mean that you're using it to pay expenses that you may not be able to afford. So you have to kind of be careful. You got to be careful with any type of financing that you're looking closely at what asset you're actually using that loan to support.
Great, thank you. Are there any other questions?
I have a question for Karen. Is she still there?
Yep, I'm here.
So Karen, for those loans that you were mentioning for the restart for $10,000 and looking at those opportunities, which I think a lot of people could really take advantage of right now, are there any credit criteria to that? I mean, do they have to provide financial statements? What is required in order to get approved for one of those loans?
That's a great question, because we're not, we have to still do due diligence on the funds that we are given to reloan out into the community. And so there is an application, and the structure is basically it's a 4% loan over 24 months with the SBA potentially paying those first 6 months for you. So that part is attractive. It is up to the $10,000. But beyond the application, we've worked really hard to develop a recovery and reopening plan template, which it's in Word, and you fill that out because we want you to, as a business, if you've been around, you've experienced COVID, and now you are reopening, what does that look like? What changed from pre-COVID? Did you lose employees? Did you pivot to online sales? Did you switch to delivery and curbside? Did you create a new product or service that wasn't there before? What does that look like in the next 1 to 3 to 6 to 12 months? Because we don't know how long this is going to last. what came out of this that you can use to carry forward, and how does your business model look differently than it did before. So that recovery plan is an exercise in how innovative can we be? What have we changed? What did we really realize that we could do without? So then we were also looking at your 2019 taxes. And at the time we were scrambling, we didn't have those yet because everyone was extending. So we were looking at the 2018. But we want you to have been in business since September 1st for those, have those tax returns. The business and the personal, if you happen to be an LLC or sole proprietor, that's going to come out of your personal return with a Schedule C. Then we're looking at, do you have an insurance policy, liability insurance? And if you're asking for $10,000, what is that going to be used for? And what kind of vendor quotes or lease payments do we see that you still owe from 3 months ago or moving forward? So again, we give you that breathing room. So there's just a little bit of documentation, not too crazy. And we do look at the credit. The personal credit is key because we have the ability, I would say, to work with those that maybe don't have that perfect shiny credit score up in the 800s, right? Because life has happened and life is happening. And so we are able to sometimes work around that, knowing that you are working hard to pay things off, you're paying on time, you've got a plan to get out of those situations. So we're able to do that when maybe other lenders can't. So great question, Marci. It's not crazy, but it's a lot of the same information. And we walk you through that. We'll walk you through each document. Once you submit the online form, we schedule a time to talk through that application with you and go over all of those documents so that you know what you're getting into. And we've waived all fees except for the UCC filing fees, which is $100.
And that must mean it's secured, so it can be done in conjunction with someone that already has a bank loan?
It's personally guaranteed by that borrower, and
okay.
We are trying to, again, in this case, do the working capital that is needed to still recover anything prior to COVID that you owed on and is past due and everything. We're not going to look at that as much as we are what happened since about March 12th, March 15th, and how can we help you get out from under that and look out maybe 3 to 6 months to say, if that's covered, you can focus on your business and bringing it back to maybe to pre-COVID levels at some point.
Okay. Well, it's a great tool, so I want to make sure we talked about it a little more because it is important and a great source of cash in what's been a really tough year.